Hello people. So today we will be learning about the final accounts of banking company. So before going to learn about the format and the schedules, let us learn about the meaning. So here the meaning states that according to Banking Regulation Act 1949 defines banking company as a company which transact the business of banks in India. So it is regulated. So banks are regulated by Banking Regulation Act 1949. So banking company has any company which transact the business of banks in India. Coming to the definitions, as per BRA 1949, it defines banking as accepting deposits from public and repayable on demand. So here the bank has two objectives. One is to accept the deposits and lend loans. So here's the same thing. So accepting deposits from the public, then repay them on demand, and or withdraw by check or draft or order. So this is the definition of a bank. So there are certain books are maintained in the banking companies. That is, there are three categories. One is principal books. First, principal books comes under cash book as well as the general ledger. So what is cash book? Cash book provides the summary of collections and payments of cash. So whatever the inflow or outflow in the banks will be called as a cash book, where this is a part of principal book. So these are the main books. Okay. So second will be general ledger. General ledger is which provides the details about the expenses and assets not covered under any kind of subsidiary books. So subsidiary books consist of subsidiary books consist of current account ledger, savings account ledger, even fixed deposits account ledger, and investment ledger, bills discounted, and purchase ledger. So other books are like memorandum books. One is jewelry register, locker register, as well as DD register. Jewelry and locker is like when you keep your jewelry into a particular bank. So these registers are maintained. Okay. So next, coming to features of banking accounts. So company have to maintain books of accounts under double entry system. So the main keyword here is double entry system, and it has to maintain all books of accounts under provision of BRA. BRA is nothing but Banking Regulation Act 1949. And the posting of transaction in ledger will be based on debit and credit slips. So whatever the transaction that take place, so that ledger will be based on the debit and credit slips that received by the bank. And self-balancing system of ledger is followed by accounting. So coming to the provisions, there are three provisions that are followed by banking companies. One is statutory reserve. So statutory reserve is any kind of bank in India has to at least keep 25% of its net profit, okay, before declaring a dividend. Okay, these are the 25% reserve fund that has to be kept by a bank. Cash reserve ratio, that is CRR. So as per section 42, every scheduled and non-scheduled bank must deposit with RBI and amount equal to 3%. That is, here it is 25%. So CRR is cash reserve ratio, that bank need to keep it with deposit with RBI. So CRR is deposit with RBI. Statutory liquidity ratio is bank in India are required to maintain in form of cash, gold, government approved securities before providing credit to customers. So you just before providing credit to customer, you need to maintain some kind of cash, particular cash in your banks. So that is statutory liquidity ratio. Thank you for listening, and subscribe our channel for more videos.